Hi everyone, this is Eric from Traders Helping Traders with your weekend market update for the financials and the stock indices. Well, the September mini Dow has been sliding pretty much since the end of May. The stock market has fallen out of bed, as they say, and it doesn't look like there's any end in sight. Reaction after reaction has sent the market lower, and at the end of last week we have the first sign of support that might hold. You'll notice that this is very similar to this week's lesson in that a few days before we had a magic bar formation. The formation didn't trigger. In fact, it headed lower, and then by the end of last week, we saw support come in again. Now, it remains to be seen whether or not the support will hold. Obviously, the market has moved a long way from our moving average line, so a retracement is certainly not out of the question. In fact, if we throw our Fibonacci numbers on here, just to give us an idea where the market might retrace to, you'll see that the 50% level is very close to our moving average line, and the 62% level is pretty much bang on. So it looks like any type of retracement from the 30 to the 50 to the 62 is definitely within reason. I would probably take a look at the 31st, or pardon me, the 38 retracement. And what we would do is we would look to essentially bracket Friday's range. So we would look to, oh, I'm sorry, I keep saying Fridays. It was Thursday's range. Friday was the holiday. Now you could wait for a confirmation here on Monday. You could wait for the market to actually trade higher to confirm support and then buy it. This is going to be a little bit more on the risky side. The high was 113.23. We're going to want to give it at least a few points before getting in on the long side. Let's say we give it 20 points. The low 111.38. I'm going to be a little faster about getting out of this trade if it goes sideways on us, though. We'll get out just on the underside of 30. See what those figures look like. Well, certainly not an inexpensive trade, is it? I could look to cover the trade a little bit tighter, let's say just before we get too close to the 116 line. Let's make sure we exit plenty early of the 38% retracement line. And we would have a trade that looks something like this, where we would look to buy the high or a breakout above Friday's high, exit before the 116 area, which is the 38% retracement line, where we will very likely see at least a short-term bounce, and exit the trade should the market move higher and then reverse on us and head lower. As you can tell, this is also a counter-trend trade, so the risk on this one is very high, especially coming out of a holiday weekend. And that is your weekend market update for the financials and the stock indices.